Hello, my name's Ryan Gray, and in this video we're going to be backtesting Euro USD on the daily time frame using my latest strategy, which consists of TradingView and MT4. So first of all, we're going to look at the strategy backtest as a whole over the last 20 years. You can see here that the strategy has performed extremely well on Euro Dollar, consistent and stable. If you look at the pound, it shows similar gains. Likewise with Australian dollar, New Zealand dollar, Canadian dollar, Japanese yen, Swiss franc and gold. When you combine these returns into a portfolio, you stand a better chance of performing over the long run. So first we're going to start with Euro Dollar, and we're just going to look at this year. So really from 2022 January, and we're just going to do a back test using the algorithm and these daily filters. So to do this faster, we're going to combine windows on MT4 and TradingView. Starting in January, you can see the first trade was short on the 4th of January to the 10th of January. And we're on Euro Dollar. 15-minute time frame using control points and 1 pip as spread. We're going to then run this to start with in just having a look at the algorithm so you can see that it doesn't overtrade or scalp the market. So you can see that if we analyze these trades that were taken over that period, we're just going to add on period separators and take off the grid. And we can see each one of these dashed lines here is a separate day. You can see the close of the trade is always at 8 PM London. And we can see that these are sensible trades in terms of they're not too quick and there's plenty of time for the market to get in and out. So in this situation here, we haven't turned a profit. We're not going to win every day with each pair. We're not looking for that. What we're looking for is consistent gains over the long run. So the net profit on this was minus 46. And we'll just add this into this spreadsheet here. So if I just briefly show you these numbers are from this month, trading on different currencies. I was just adding them up, and it's extremely profitable. So not to worry here that we lost $46. That's not a worry. Okay, so then the next trade is on 10th of January to the 20th of January. So this is a long trade. We're not going to watch it in visual mode this time because we've already seen how the algorithm trades, so we don't need to do that every time. Okay, so we turned a profit, $86. Okay, so the next trade now is on 20th of January to the 3rd of February. On short. Okay, so it hasn't turned a profit, but it's not to worry. The main reason why you're not getting worried about turning a profit is you're going to be trading all the other currencies, which hopefully will turn a profit. If we trade this over the whole year, we're going to make money. So the 3rd of February to the 14th. It's made 114. Yeah, I just did that really quick, but I'm looking for this number here, the total net profit, You can see it on the graph as well roughly, but that total net profit is the number we're looking at there. So the next trade now is the 14th of February to the 17th. Okay, it's a £2 loss. You can put that in, but it's really insignificant. So 17th of February to the 22nd to the 21st. 17th to the 21st, and then there's a big one. Minus 88, and the big one. So you should win this 21st of February to the 1st of April. Okay, so turn to profit 470 on that one, bringing the profit on that account to 53%. So we've got a trade here, 1st of April to the 5th of April on long. And how this algorithm works is it looks at the daily highs, the daily lows, whether it's even going to bother entering. We can see here it's completely under the moving average, so we're not going to be taking any trades. So we've actually saved ourselves quite a bit of profit, quite a bit of our account by just not trading and using the algorithm. So that's an example of how the algorithm can improve on these returns that we saw just using the dailies and TradingView. So the algorithm is worth using. So the 5th of April now to the 21st. That's really one of the main enhancements of using algorithms, and also that it uses a bit extra risk when it deems appropriate. So it has like a money recovery strategy to get the money back if it does lose. Okay, so again, we don't need to watch this every time. So the next one now, 21st to the 26th. Now you're not going to save your profit every time, but if you save it 1 or 2 times a year, or maybe 5 or 10 times a year, then you are going to make a difference. You're not going to have as many losers. So here we got a bit of a loss, but if you look at how much that is in percentage terms, we only lost $38 and it moved 1.24%. Usually when it moves over 1%, we make about 100 quid. So that again is a small loss. So 26th of April now to the 6th of May. Okay, so it's good, it's 215. It's already doubled the account on one pair. 6th of April to the 10th. Yeah, that's right. Okay, so minus £7, again insignificant. 10th to the 19th. $211, and finally to top it off we've got 19th of May to the present day. Just going to set that into June. On long, I'll just trade to the latest trading day. Okay, so again it's made another 389 on that as well. So you can see that this algorithm has turned a £1,000 account into $3,300. Now imagine that now times another 7. So we've got 7 more trading pairs. So if we do this again, so I'm just theoreticizing what the other trading pairs would do. Again, something very similar to what we've seen. So you can see $1,000 becomes a hell of a lot of money after just using this bot with the TradingView filter. So again, this bot performs just as well as it does on euro dollar as it does on the others. In fact, it probably performs better on the others because euro dollar is more heavily traded. So that's going to conclude this video on euro dollar and the backtest this year.